Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Now despite having an overall choppy day, this is the 15-minute chart of SPY and it came in the form of a triangle pattern which usually equal choppy or basic type of day, okay? Despite that, we are seeing some bullishness still, okay? For the short term, guys, for the short term. Now what I mean is we had a level at 407 that was based on the 38.2 retracement level from January 2022 high down to June low. Okay, obviously we're above that level now. Also, we had a trend line, a multi-month trend line from August 16th down to August 26th, connects to August 26th high, also down to September 9th high. We gapped above that. Okay, those are two bullish signs. Last week, we were able to recapture the 405 level. That 405 level was based on the fib level from June low up to August high. Okay, so a lot of these fib levels, guys, that I use, they work. And I'm a level type of guy, right? Support, resistance, all that type of stuff. But I absolutely love Fibonacci levels. Okay, some people don't like it. Some people love it. I love it, especially if you're a swing trader. I definitely love it. Okay, so today cleared another critical level, which is the 410 level. The reason is every time the market reveals itself to me a new trend, right? Similar to how we have the downtrend from January down to June low, right? And then we have a smaller trend line from June low up to August high, right? So as you can see here, we have another trend from August high down to early September low. So as a fib trader, I added some Fibonacci levels to that. And the 50% retracement level for that August high down to September low is at 410. We recaptured or cleared, you could say, that 410 level today. That's pretty bullish, guys. All right? We got some day-to-day tomorrow, CPI tomorrow. Now, I trade mostly based on technicals, but it's important that we be aware of when CPI is out, the data that's coming out and stuff, because these information can serve as strong catalysts for price action. Okay? And I don't like to trade chop days. Like today, I was able to catch some level to level moves, but overall, I don't like to trade chop days. I like it when the market is just trending. I can just hold. It's so much easier. So with these catalysts, they can help get us those trend days. So we'll see what happens tomorrow. Okay? We'll see how the market reacts to the news tomorrow. On CPI, FOMC days, usually the first reaction is a fake out, but that's not always the case. My advice to you guys is to know the levels, know the setups, and just trade it unbiasedly. Size down, because it will be tricky. Size down, manage your risk. False breakouts and false breakdowns will be your best friend, okay? So no matter what, remember your training, remember what you learn about technical analysis and how we use it, okay? So right now, here's my level. First support level is 410, okay? Below that, puts 407 in play, okay? 407 is a very critical level, and if 407 fails, 405, then 403.5 is in play. You guys know my strategy. I short the breakdowns of support. Is it a 100% strategy that's always going to lead to profitability? No, it's not. But in my opinion, it's better than 51%. With proper risk management, that's all we really need. Okay? So 410 fails, 407 in play, then 405, 403.5, then possibly gap fill around 400-ish, 0.8-ish. Okay? Keep in mind, we've got this trend line that we broke out today. If we fall back below that trend line is around 405. Below 405, I would swing puts. I usually don't swing, but I would swing puts if SPY fails 405 because we're most likely going to head down to more downside. And that is a false breakout setup based on the daily charts. If you're going to swing, might as well use a higher time frame. Okay? But let's say 410 holds. Let's say 407 holds. It might pull back to 407 and then might continue to bounce, okay? Above 410, we have a resistance around 411.7-ish. That's a previous low back in late August, Okay, if we can clear 407, 411.7ish. It was also the high for today as well. That would put 415.32 in play. 415.32 is a 23.6 retracement level. Okay, from the June low up to the August high. It is also the 61.8 retracement level for August high down to September low. So we have an area of confluence. So around that 415-ish level, 415 to 415.4-ish, around there, very critical level. Okay, we'll see how the market reacts. So far, every time we clear the fib level, we go and test the next fib levels. And I to be fair, we have a lot of fib levels on my chart, guys. But all we got to do is follow the price action. I am a price action trader. All right. And like I said, if 410 holds, we still have more upside as possible. All right. Maybe we'll even touch the 200-day moving average again. Maybe. But 410 and 47 lowest must hold. If those two level fails, we might likely see more downside, and that's your chance to short it. All right. QQQ cleared the 38.2 retracement level today at 309.54. That is my fib level from June low up to August high. We're going to keep it very simple for QQQ. As long as 309.54 holds, my next resistance up there at 315.3-ish, then possibly higher to 319. As long as we're above 309.54, my advice, my advice is to stay bullish. But if we want to get bearish, we gotta wait for a critical support level to fail. That starts with 309.54. If that fails, we could possibly see more downside back down to 305.38. That's based on this multi-month trend line. Below 305.38 will give us a false breakout setup, very bearish, and puts 301.84 and possibly 294 back in play. Okay, so above 309.54, stay bull bias. Below 309.54, switch over to bear bias. Tesla. I mentioned that we recaptured this yellow trend line that I got here. 297 must hold for us to stay bullish, and it followed through. All right, so I have fib levels from August high down to September lows. I have a fib level here, 78.6 retracement level, and it's at 304.2-ish, I would say. Okay, that's 304.2-ish. We closed just above it today. Okay, not a strong close, but we'll see what happens. If Tesla can clear that level, we will put 310.6 in play, and then possibly 314.6. Okay, 310.6, then 314.6 if this 304.2 level can hold. However, if it fails to hold, we have a gap all the way down around 299.8-ish, and then another test of the yellow trend line at 298. If 298 fails, we could possibly drop back down to test the 200-day moving average, which is around 295. Below the 200-day moving average, very bearish. That'll give us a false breakout setup and possibly lead to more downside. Okay, guys? All right, so that's what I got for SPY, QQQ, and Tesla. Let's end this with option flow. Filter for 500K premiums or above, 69% for puts. Okay, still seeing big money, buying lots of puts, putting a lot of money in puts. Okay, dark pool though, mostly bullish in dark pool. Okay, had a good amount of money coming in at the full 6.54 level, so keep that in mind. We don't know if they're buys or sells for sure, but Cheddar Flow interprets it as bullish when they give us a green like this. Okay. QQQ, 92% in the puts. You see, we're seeing big money still betting to the downside, buying lots and contracts betting to the downside. But dark pool for today, at least, still pretty bullish. And let's end this with Tesla. Yep, 95% for calls. Wow, Tesla is looking very, very bullish right now. Pretty awesome. Good for Tesla. All right, guys, so that's what I have for you guys. If you guys are looking for a profitable trading community to join, please consider joining Uncle Charles' Discord. My goal is to get to 200 members. It's extremely hard to do, but I believe it's possible. All right, gotta put the work in. All right, so thank you guys so much for watching. Peace.